Estate Reality Show with EJ Hawkins and Cortez M. Johnson. Only on LA Talk Radio.
Thank you for tuning in to the Real Estate Reality Show. I hope everyone had a great weekend. Mr. Johnson, how are you doing today?
Oh, I'm doing fantastic. And yourself, Mr. EJ Hawkins?
I'm doing all right. How was your weekend?
Let's see here. Yesterday, took the kids to gymnastics.
Okay.
Went to the mall.
Wait a minute. Gymnastics?
Gymnastics. My niece and my daughter.
So they backflipping and cartwheeling and...
Yes, they love it.
Okay. All right. Okay. Then,
what about your weekend?
What did I do this weekend? I didn't do much of anything this weekend. I just kind of hung out with the kids, and that was about it.
Oh, it sounds like kids everywhere.
Man, kids everywhere. You know, I got multiple kids. So wow.
So do I.
Boy, good Lord. So, you know, last week we talked about short sales, foreclosures, and things of that nature. I got a lot of good feedback on that one. So
Yes.
I'm glad that we were able to help some people out there. This week, we kind of want to expand on a topic that we talked about a few weeks ago in terms of types of loans. So conventional and jumbo loans. Let's talk about conventional loans. What is the big difference between those types of loans compared to anything else out there on the market? And those seem to be the types of loans that not only most people in the industry prefer,
Right.
but also most buyers inquire about a conventional loan.
Right. So first I want to say that, if you have the conventional loans and the FHA loans.
Right.
Now, with our very first show, we talked about documents needed
Right.
for FHA loans and VA loans.
Right.
Those same exact documents are needed for conventional loans as far as paycheck stubs, bank statements, W-2s, driver's license, social security card. We need a loan application.
Right.
And then we'll get the DU approval. So with any type of financing, we need all the documents plus the loan application. Then we'll get the DU approval. That's for FHA or conventional.
Right. Let me ask you this. So among the borrowers that you will qualify for a loan, for those that have the ability to either go FHA or conventional, what do you see more people going?
Good question. It depends on the funds available.
Got it.
So with FHA, I'll pay all of the closing costs with the $8,000, $9,000 credit.
Right.
With conventional, I can still pay the closing costs as long as there's a high credit score.
Got it.
But FHA, I can do it with a lower credit score.
So when you say high credit score, over 700.
Over 700, I can still pay your closing costs with the FHA loan. More so under 417. So
it has to be more of a conforming loan.
it's a conforming loan.
417.
Right.
So once it goes over that, then
Right.
it's
So
all out the window.
Right. So most people, the conventional loan is a cleaner loan, meaning there's no mortgage insurance premium added to the loan amount.
Right.
But you do have to have the down payment plus the closing cost if I can't pay the closing cost.
Right. And the minimum down payment for a conventional loan is 5%, correct?
Yes, it is.
Okay. Let me ask you this. Now, with a conventional loan, you can either go owner-occupied or non-owner-occupied, correct?
Yes.
Which is something that technically cannot be done with an FHA loan, right?
You're absolutely correct.
Okay.
That's a good point. Yes.
Okay. So, single-family residences, 2 to 4 units, you can go conventional.
Yes. So basically, I have some notes here because, all of these guidelines are not Cortez's rules.
Oh, they're not?
No.
These guidelines are Fannie and Freddie.
Fannie and Freddie. I don't make up rules.
Right.
I just go by the rules, right?
Well, back in the day, every lender around town was making up their own rules. So,
That's true.
Fannie, Freddie, Larry, Jack, Jim, everybody had their own rules. So,
Right.
So now, although Fannie and Freddie are the biggest buyers in terms of who kind of set the standard of the market, everyone follows those guidelines in terms of loans.
Yes, all the big banks, the credit unions, Cortez follows Fannie, Freddie guidelines unless that particular bank has a portfolio program, which some of the big banks do have portfolio programs,
Right.
and they have their own rules
But
because
those are for what the special
right, like
borrower.
right, like they don't sell the loan,
Right.
but most loans go by Fannie Mae and Freddie Mac
Got it.
guidelines.
Okay, so what about for those borrowers who are going? So I know I see you have here. So if you're going, if it's under 417 and it's conforming, so for 4 units you can go 20% down. That's the minimum you can put down for 4 units with a conventional loan.
Yes, under 417 loan amount.
Under 417, and then once you go over that, then you have to do well. If you go over that 417 amount, then it's what, still 20% down?
Well, then that's called high balance, so that's a whole nother ball game. So with conforming,
Right.
So for an example, let me go down the list for you. So now people always ask about 3% conventional,
Right.
and for some reason that program comes, goes. I don't know why.
Right. So it's not a standard program.
No,
It's like
it's
a
here one
teaser.
day, gone the next day, right?
Right.
But what's common is 5% down with a single family residence under 417,000. That's in Los Angeles County and Orange County,
Got it.
because we're high balance. Then with 2 units, it's 15% down,
Okay.
up to 533,850.
Got it.
For 3 units, it's 20% down, up to 645,300. Now this is all conforming,
Right.
okay? And then 4 units is 20% down, under 801,950.
Now, explain for those people who do not. They've probably heard the word thrown around: conforming, non-conforming. What is the difference between a non-conforming and conforming?
Good
loan?
question. Conforming is the normal loan balances, but with the whole real estate meltdown and real estate bubble and all that stuff, the government increased the conforming up to, for single family residents, up to 625,500. So anything over the conforming, it's temporary. It's temporary loan limit increase.
Got it.
And they keep on extending it every single year.
Right. Well, as the prices go up and mortgage balances increase, it's just
Right.
standard for the market.
Right.
So let me ask you this. So with a conventional loan, so I know, let me back up a bit here. So with an FHA loan, a person can get a gift for their down payment.
They sure can.
Can that happen on a conventional loan?
They sure can.
Oh,
So,
really?
Yeah. So now I don't know all the rules. If any lender or loan officer tells any buyer or realtor that they know all the rules, run.
They're fibbing.
They're fibbing. They're not
Okay.
telling the truth. So I'm gonna let you know that I had a transaction in Glendale for $840, and this particular buyer, this particular client, had the 20% down, right?
Right.
But he had it in some stocks and mutual funds, and his parents said, "No, you're not selling those stocks."
Wait a minute. His parents.
His parents.
Was this a child or a grown man?
This is a grown young man.
Oh,
but,
a grown young man.
But his parents had a trust.
Okay.
Established for him.
Okay.
And that trust has some funds in it, and the parents said, "No, you're not going to sell these stocks. We're just going to what else can we do, Cortez?" So both his parents are calling me. I'm like, I don't know.
Right.
He has the money.
Right.
So I'm connected with 20 different lenders. So I called my favorite lender, who we are a direct lender with, and she said, "Cortez, you can do a gift." I said, "Are you serious?"
On a conventional loan.
On a conventional loan. Let me
Okay.
tell you what I found out. We ended up doing a gift. The father had 10% and the mother had 10%. Gift.
So let me back up. Okay, so if someone is getting a loan, getting a gift on a conventional loan, do they still have to show reserves for the down payment or no?
Who, the buyer or the?
The borrower, the buyer.
Oh yeah, he had the reserves. He had plenty reserves.
It was just wasn't as accessible as he wanted
Right,
it
like
to be.
he had to sit. Now he did have some money in the checking account,
Right.
and he had some money in the stock
Okay.
market, but he didn't have enough liquid in the checking account for everything.
Right.
He could have if he sold some stock.
Right.
But his parents said, no, you're not doing that. Whatever you don't have, we're going to give it to you so you don't have to sell your stock.
Got it. Got it. So talk to me about, well, let me ask you this, and you can pay closing costs on a
Yeah, so
conventional
let
loan.
me give you an example.
Okay.
I have a escrow right now in Riverside for $375, and for some reason, this listing agent said, we don't want you to go FHA. We want you to go conventional.
You can't dictate what type of financing you use on a property.
That is absolutely correct.
That's ridiculous. Who's the? Well, let me be quiet. Oh
Okay,
my gosh.
So let me tell you what happened. So all I do is just go with the flow. I said,
Right.
okay, well, you want to go conventional? So now keep in mind, the interest rates is what's called pricing.
Right.
So you have big banks, little banks, credit unions, direct lenders, correspondent lenders, brokers. Everybody follows the same rules, but the pricing is different. If somebody says, well, what can Cortez do that's different? We have the same rules as everyone, but my pricing is different. And that's because the owner of the company that I work for, he controls the pricing because he's a direct lender.
Right.
There's no middleman.
Right.
Our lines of credit are in our company name.
Right.
So with this particular deal in Riverside, the customer has to go conventional. His credit score is a 763.
Okay.
So he has a high credit score. As a result, I'm able to reward him for that high credit score. So what I did was I gave the buyer a list, bullet point, 3.8, 4%, 4.1, 4.2, 4.3, and 4.5. Gave him a list of all the rates, what the principal and interest are for each rate, and what the credit is for each rate. They chose a 4.5.
Really?
Yes,
Why is that?
because
They get a larger credit?
$7,000 credit.
Really?
Yes,
And their total closing cost was what?
it'll be around 7,000 or 8,000.
Okay.
Now, somebody might say 4.5. Now, if you go online and go rate shopping, you will find that most of the big banks are offering a 4.2, charging 1 point.
Right.
I'm offering a 4.5, no points, with a $7,000 credit. You follow me?
I follow you. And
Okay.
see, you know, my thought process about that in terms of, because I know people are always in the rates. Oh, I want the 4.5,
Right.
4.2, or 3.9. I mean, realistically, the interest rate would only be significant if you were only going to stay in the house for 30 years and pay off the house in 30 years. Most people stay in a home from anywhere between 5 to 7 years. In that time frame, whether you have a 4.5 or a 4.0, the likelihood of you actually, you know, paying into the principal and paying a significant amount of the interest is extremely small. So from that standpoint, it would behoove you not to get the credit, take the 4.5 and just get the credit. Because you want to
Exactly.
save all the money up front that you can.
Exactly. How many people are literally paying off their home, sticking to one loan?
That doesn't happen anymore.
Doesn't happen
People
anymore.
refinanced and they sell.
Right.
They don't stay in homes 30 years and pay off. Now, if that be the case, then you do want the lowest rate possible.
Right.
But since realistically you're not necessarily paying the rate, you want the most affordable payment and you want the most bang for your buck. So if you have to take a little higher bump in the rate to get additional money so you can pay your closing costs and our down payment, then that makes sense.
Right.
So, because I know we had a client, she waited till the 11th hour.
She
Won't
sure
say any
did.
names.
Right.
She waited till the 11th hour to pick her rate, and the difference in the rates that she waited on over I don't know how many weeks,
Right.
was not that significant.
I was emailing her every single day.
Right.
Pick one of these rates.
Right.
and the difference in payment is not that big of a difference.
Right.
So, so with this Riverside client, see now his father got involved. Cortez, what rate are you giving my son? You know, and I said, hey, these are the rates. You pick the rate, not me.
Right.
You're my boss.
Right.
Do you want a 3.8, 4%, 4.5? You tell me which rate you want.
Right.
And I had to let this is what people don't know either. I don't have control over the interest rates.
You don't.
No.
This boy, I swear, people would swear that you do.
No, let me tell you. If I knew what the interest rates would be, I would just be in I'll be a stockbroker.
Right.
I wouldn't be in real estate.
Right.
I'll be in New York at the stock market because I would know what's going to happen.
Right.
So what people don't realize is that the interest rates correlate with the bond market, the 10-year note. They can Google 10-year note. It goes up and down every day, multiple times a day. And if I give you a quote, so this father, Cortez, you gave us a quote July 9th, and today is July 15th. It's a different number. I said, it sure is. That was 9 days ago.
Right.
The market moves every day, multiple times a day.
Right. So jumping back into the conventional, I know the one benefit, there's multiple benefits, but in the actual market, when you're out there in the market and you have a loan, the benefit of having a conventional loan is that your options are unlimited in terms of there are really no restrictions on where you can buy. Why do I say that? Is because we talked about this before. If you are FHA, it reduces the types of properties that you can buy significantly.
Yes.
Almost 90% of the condos and townhomes in Los Angeles County are not FHA approved.
Yeah.
It is
not
crazy. I don't care what you qualify for.
Right.
It'd be $800,000 with an FHA loan. I'm pretty sure it wouldn't be that high, but with an FHA loan, you can't buy a condo in some areas.
Let me tell you, the only condos that I know that are FHA approved, there's one building in West Hollywood.
Right.
And then Briarcliff or Briarwood in Inglewood.
Briarwood.
But that's it.
Right. That's
like
it.
there's so for a client to buy a condo, they must go conventional more than likely.
Right.
And so people want to know why. Because the HOA is not FHA approved.
Right. And the reality is the reason why many of these HOAs are not FHA approved, it's a multitude of things, but most of the time it comes down to it takes some work actually keeping the complex FHA approved in terms of filling out the paperwork, turning it in.
Right.
Most HOA presidents, they don't have time to be doing all that. They have other jobs to do. So that's one of the reasons, but there are a multitude of them. But that's one of the reasons why conventional loans are more advantageous than an FHA loan. But if you have to go FHA, you make it work for you as best as you can.
Right. Now some of these condos
Right.
still can't go conventional.
Right.
Can I tell you why?
Talk to me.
Okay. It's because we're doing the loan conventional 5% down
Right.
in Lakewood, right? Then the lender sends escrow a HOA certification.
Right.
The HOA fills out all this information. Are there any lawsuits? How many people are delinquent on their HOA? How many people
Are renters?
Right. All these questions, right? And Fannie Mae and Freddie Mac still might not take that loan because of the HOA certification. I had a HOA certification, and I won't name this big bank because I'm connected with them. We sent them that certification, and the loan got denied in like 2 minutes.
Really?
Like we uploaded this.
They replied it right back to you. Denied.
Denied. And
Wow.
And so now, I want people to know what type of people that we are. Let's just say, I'm doing a loan conventional, and the HOA cert doesn't come back correct.
Right.
I'm the type of guy, I will refer my client, our client or whatever. I know of a bank that I won't say that will do that loan.
Right.
That's because they don't go by Fannie and Freddie. It's called portfolio. They have a portfolio
loan.
program, and they will gladly take that loan with that HOA certification that Fannie Mae and Freddie Mac wouldn't take.
Right. And so I know one good thing that one thing that I do when I'm looking at condos, those are the questions that I ask right up front to the listing agent, because you minimize the amount of time you spend on that property. You get your client all ready to go, writing an offer, you put in an offer, and you get an escrow, and then you find out all of these, the ratio from renters to owners is backwards, or there are multiple lawsuits pending against the HOA. You could have asked these questions right off the bat. Hopefully, the other agent knows this stuff. Hopefully. Good Lord.
And speaking of agents, realtors always ask lenders, "Oh, this condo is not FHA approved. Can we get a spot approval?" The answer is no.
No.
Answer is no.
Right. They're out of touch with the market if they're asking for a spot approval.
Right.
So now, jumping back to conventional loans, can the seller credit the buyer towards their closing costs? So let's just say, at the end of the day, you can only give them a specific amount of money towards their closing costs.
Yes.
Let's just say closing costs are $15,000. You can give them $9,000. Can they make up the difference with a credit from the seller?
Yes, with conventional, they can go up to 3%.
Okay, so they can go up to 3%.
Seller concession.
Okay.
Yes.
Now, with a conventional loan, what types of reserves are required?
Okay, so with the conforming up to 417
Okay.
in Los Angeles County and Orange County, and with the high balance up to 625,500 in Los Angeles County and Orange County, the DU approval might say no reserve requirement, or they might say 2 months reserves requirement.
But as a rule of thumb, before that person even comes to you,
Right.
or well, when they're initiating the conversation, I would think that you would want them to have reserves on hand.
At
So in the
least-
event that they come back and say you need reserves, or if you don't, you'd already have that in place.
Yes, I at least 2 months reserve. So people might be thinking, what are reserves?
Right. What are reserves?
So reserves are you have enough funds in your account after the loan closes for 2 months payments. So if your monthly payments are $3,000 a month,
Right.
there has to be at least $6,000 in your checking account, savings account, CD, money market, 401k, thrift savings plan. There has to be at least 2 months money in the bank after we close.
And I would think that any borrower would want to have reserves before they buy, because in the previous market,
Right.
you didn't have to have any reserves. People would literally default on their first mortgage payment
Yes.
because they spent all their money buying the house, buying the furniture and everything else, and now they're left high and dry.
Yes. Now that's true. And with FHA, just to compare, FHA does not have a reserve requirement.
Really?
You can get it. You can literally close an FHA deal, and when you close, you have $0 in the bank.
Really?
Yes.
I would not suggest that, people. Having no money in the bank, buying a house is not cool.
Right.
So we'll open up the line for some questions if people want to call in and have any questions about what we're talking about. You can give us a call at 818-570-5085. Again, that's 818-570-5085. So let's move on. And you touched on it a little bit in our conversation. So jumbo loans, $625 loan amount. Now, one thing that I'm seeing in the market right now is people are taking shorter loan, well, not balances, but shorter loan terms, as opposed to going 30 years. I see 15-year loans.
Right.
So now, is there a different requirement? So let's just say applying for a home loan.
Right.
I want a 15-year loan. Are there different requirements for me for that loan compared to a 30-year loan?
Good question. There is not a different requirement, but your debt to income ratio must fit.
Right.
So ironically, that Glendale client that I had example,
Right.
he started off with a 30-year fix,
Right.
and his income was high enough to do a 15-year when we did the purchase loan,
Right.
but he didn't want it. I said, okay. 1 year later, Cortez, I want to do it.
So he was able to refi
So we
to a
did a
15-year loan.
refinance into a 50 because his income, his debt to income ratio fit a 30-year loan and a 15-year loan.
Right. Let me ask you this. So what are the is the interest rate different
Oh,
for a 15-year compared to a 30-year loan?
okay. Yes. So I believe that rate was 3%. Like the rate is a lot lower.
3%?
It was 3% at that time. And the rates are still low now.
Lord. Yeah, I know. I mean, compared to where they were before, I mean,
Right.
you know, even in the mid fours, it's still a good rate.
Oh, yeah. These are still good.
I mean, I remember when if someone got a 6% loan a
Right.
few years ago, they thought they were rolling.
but we've been spoiled.
We've been spoiled.
Yes. So with that person, he's going to own his home free and clear.
Hold that thought for a second,
Okay.
Mrs. Johnson. We got a caller calling in. Caller, thank you for calling the Real Estate Reality Show. My name is EJ along with Cortez. How can we help you?
Hey, EJ, Cortez. I have a question here. Is there a upfront charge for the DU approval and credit report? Like a upfront charge that they do?
Oh, you know what? That's a good question. We at my company is called La Paz Mortgage. We do not have an upfront cost for the DU approval and the credit report. That's an excellent question. But first, we work towards earning your business by collecting all your documents, your loan application, running the DU approval, so you can start shopping.
So when you guys run the credit, you run the credit and you're putting them through the system for DU approval
Yes,
simultaneously.
exactly.
Got it.
Right.
And that's no charge
That's no charge as
Got
of
it.
right now.
as of right now.
Yes.
Okay. All right. Did you have any other questions, sir?
No. How long does this? How long is it for?
How long is the
Because I
DU
heard you-
approval for? Good question.
Yeah.
The DU approval is good for 60 days.
And then after 60 days, they have to submit their information again.
Right. Just update the paperwork. You know, as long as nothing changed, they didn't go get a car or something like that.
You don't have to run the credit again, do you?
Oh, yes.
Okay, so you do.
Right.
Now, does it leave a blemish on the credit report when you run it again in 60 days?
No, because once we get somebody DU approved and we know that they want to buy, we'll coach them on what not to do
Right.
when looking for a home.
Got it.
Like,
Got
don't
it.
quit your job.
Don't quit your day job. Right. So, yeah, that was a good question.
Yeah, good question.
Okay. All right. Thanks for calling in.
All right. Thank you.
Thank
You
you,
are-
sir. Okay.
That was a good question.
Yeah.
So, talk to me a little bit more about, so with a jumbo loan over 625,
Right.
how prevalent are you seeing those in the market at this time? Are you seeing a lot of jumbo loans nowadays?
Well, you know, in certain areas, that's the only loan. You know, Santa Monica,
Right.
you know,
Oh, yeah.
like West Los Angeles.
Right.
That's the more common loan. But what some people do, because see, the jumbo loan is any loan over 625, 500.
Right.
So what I've been doing is, and I've been lucky, I'll tell my client, you know what? This house is 800,000, 900,000. Why don't you just get a loan amount of 625, 500?
And then come in with the difference as a
Come
down
up with the
payment.
difference, the down payment.
You can get them what, a better rate?
Better rate. It'll be a better interest rate, no mortgage insurance. It'll be a beautiful loan.
And what is the likelihood? I'm assuming, obviously, if you have the ability, you should, if you
Right.
are buying a $900,000 or $800,000 home, to have that kind of money in reserves.
Yes.
It's not a necessity, but if you have it, then it's a benefit.
Right, because with let's say you're buying a single family residence,
Mm-hmm.
and the loan amount is, let's say the loan amount is I don't know, 700,000,
Uh huh.
and then the loan amount 625. Like basically, you have to have 10% down anyway
Right.
to even be in that in that game with homes that expensive.
Right.
So you should have 10 to 20% down anyway. But I got to tell you, people have it.
I'm seeing more money in the market
Oh yes.
nowadays than I've ever seen before.
Let me tell you, I had a client that was looking in the South Bay area, South Torrance, by the Galleria Mall, the Lamo Mall, like even by Bishop Montgomery High School, Redondo, and the market is so, you wouldn't believe how many people have 20 to 30%.
Oh
down.
yeah, it's everywhere.
Right.
It's everywhere. However, let me say this also to the borrowers and buyers who do not have
Right.
20% down, although that may strengthen your offer because it's very competitive in the market right now. There are other things that you can do to compete with these types of people. So don't be discouraged.
Right.
If you don't have 20% down or 30% down or 10% down, if you got a FHA loan, use the heck out of it and just got to be creative.
And guess what? I think a big part of what you just said,
What?
they have to hire you as the realtor. You know why?
Man, let me tell you something. Go ahead.
Okay, because basically let's say a seller gets 10 offers.
Right.
You have 10 buyers, 10 buyers agents.
Right.
So that seller, like, you know that old term, the squeaky wheel gets what's that term? The squeaky wheel gets heard?
I've never heard that before.
Oh, okay, I just made that up. But the person that does the talking
Right.
and the emailing and the texting
Right.
and the bugging
Right.
will be heard.
You have to be persistent. I
Yes.
mean, you want your agent to be all over it.
Yes.
I mean, you want them to have great negotiating skills.
Yes.
And you can learn that by just in your first initial conversation with the
Right.
person, just talking to them, what kind of person they are when they're talking to you, to determine what type of skill sets or, knowledge that they have about the market.
Right.
Because it is imperative. I mean, negotiation skills are imperative in this market because it's so competitive. Not always the highest offer wins, albeit that may be the case
Right.
sometimes. But there have been times when I've gotten my client's offer accepted and we were not the highest offer.
Let me tell you this. We had a transaction in Carson about a month ago, right? And there were 20 plus offers.
20 offers.
20 plus offers. You know, Carson, Avalon, Delamo,
Oh,
over
yeah.
there.
Yeah, I grew up over there.
Oh, that's right.
Right.
And my client had FHA. We went up against conventional buyers.
Mm-hmm.
And guess who won?
FHA.
We did.
Right.
Even though we didn't have conventional 20%, 10%, it was just a persistence that we had with that realtor,
Right.
with that seller's realtor.
Right.
And we got our offer accepted.
Yeah, it's a lot that goes into, accepting. I mean, the realtor definitely has a huge part in it because, for example, when we get offers on properties, if we have a rapport with that agent,
Right.
or we're familiar with them in the market, we're probably going to, give their offer a second look. If compared to, let's just say we have 10 offers compared to some agent that we're unfamiliar with,
Right.
only because we're aware of how they do business. They've been in their negotiating tactics, and then, it's going to be a smooth transaction. That's what
Right.
you want when you go into a transaction. You don't want to go into a transaction with a bonehead asking you questions and trying to do stuff that makes no sense that you never heard of before. So
Right.
that definitely comes into play. So you definitely want to have someone who has great negotiating skills in this particular market.
Right.
Whereas, when the market is down, I mean, all you got to do is have a pulse and submit an offer and get it accepted. So,
Right.
that's pretty interesting. So, again, on jumbo loans, so I know you talked about, on a conforming loan,
Okay.
you said the reserve requirement was 2 months. What is the reserve requirement for a jumbo loan?
Okay, so the jumbo loan is a whole nother animal.
Right.
So now I don't want people to get confused. Now, loans up to 625, 500, those are Fannie Mae, Freddie Mac rules.
Right.
Okay, so above that, lenders for jumbo loans have their rules.
Right. Have different sets of rules.
Right?
Right.
So I have connection to 20 different lenders. So my favorite lender, I was on their guideline sheet today online, and the minimum amount of reserves for $1 million loan is 6 months. I'm sorry, 6 months reserves.
6 months reserves.
Right. So that's a lot of cash that you have to have in your account with the down payment, with the closing costs already done.
So after the closing costs, after the down payment,
Yes.
you still have to have 6 reserve. I mean, if you're paying $1 million for a home, you should.
That's true.
I mean, it would be asinine,
Right.
not to have.
And I'm gonna tell you, people, as far as the funds, I want to throw this out there. As far as funds, these funds have to be seasoned.
Explain what season means.
Okay, you just can't get a bank statement from last month and have $100,000 deposit.
Right.
That's not going to work.
Okay.
We have to source where those funds came from. Did it come from did you sell something? Did you sell a house? Did you sell some stock?
Right.
And we have to prove where that money came from if that large deposit is still showing up.
So once the deposit shows up, does it have to be in the account for a specific amount of time or no? You just have to show where it's sourced from.
Yeah, if it's still showing up. But like after 3 months, a deposit from 2 months ago won't show up anymore.
Right.
Right. So it's this is something that I see often, and people don't know. They just say, "Well, I have the money," but hey, because of the Patriot Act, we have to any deposits that is not from your payroll must be sourced.
Right. And the Patriot Act was enacted right after the whole mortgage debacle
Yes.
to ensure that, the transactions and things that we were doing, not only in real estate, but that, number one, the money is coming from, like you said, a place that you can source. It didn't come from, some third world country and some unscrupulous person
Right.
sent you the money or something like that.
Or if it's a loan
Right.
from whoever,
Right.
it has to be legitimate.
Right. So that's good stuff. So definitely want to open up the phone lines again in the event someone else wants to call in. So again, 818-570-5085. That's 818-570-5085. With conventional, you can go, well, not you can go, but you can have a bankruptcy on your credit. Chapter 7, Chapter
Good
13.
question. With conventional up to 625, 500, you can.
Okay.
And with conventional, as far as a foreclosure or short sale, I believe it's 7 years.
Really?
But it is 4 years if you put down 20%.
So if you put down 20%,
It's right.
you can have a foreclosure or short sale on your credit within the past 4 years, or it has to
Right.
be more than 4 years.
Right. Since that completion date.
Okay.
Right.
Okay.
Right. So basically, and I know where you're going.
Okay.
So with jumbo over 625, 500, these are homes in Santa Monica and Cheviot Hills and whatever, right?
Man, the San Fernando Valley, we got homes out there too.
San
man.
Fernando, hey, Calabasas,
Right.
Woodland Hills.
All right.
Right. Oh, Sherman, right here in Sherman
Oaks.
What am I talking about? Right here in Sherman Oaks, right?
Right.
But my favorite lender, if you need $1 million loan, you can't have any short sales, foreclosures, or bankruptcies, period.
At all.
I learned that today.
Really?
I didn't know that. They
Wow.
don't want to see any blemishes on your credit report.
Wow. So let me ask you this, Cortez. So I'm hearing all this stuff about, the conventional, the conforming, non-conforming, jumbo loans, all that good stuff. And I know you mentioned 20 different lenders that you work with. What is the benefit of working with a broker like yourself as opposed to just walking into my local bank, Citibank, Bank of America, and getting a loan?
Well, number one, I'm going to make sure that the pricing is better.
Got it.
I want to beat everybody.
Got it. Let me hold that thought right
Okay.
there. Let's take this call coming in right now. Thank you for calling the Real Estate Reality Show. What can we do for you?
Cortez.
Yes, sir.
Hey, what's going on? How you doing, buddy? This is Jack.
Oh, how you doing, Jack?
How's everything?
Oh, good in yourself?
I'm good. I had a quick question for you.
Okay.
My question is, from the plan that wants you to do conventional, do you also pay closing costs as well, or what?
Oh, yeah. So we touched on that a little earlier, and that's an excellent question, Jack. Jack is a realtor.
Oh, okay.
In Los Angeles. So
All right, Jack.
So basically,
How you doing, gentlemen?
All right.
the answer is yes, but it'll work with someone with good credit, meaning 700, 720 or higher. I can pay the closing costs. Now, if their credit score is a 640 or 650, then it's not going to work. I can still do the loan like every other lender.
But you can't pay the closing costs.
No, because conventional is different than FHA for some reason. I don't know why.
Right.
Like conventional will reward you for a higher credit score, but FHA, if you have a 620 or a 720, I'm going to give everybody the same good rate.
Right. Well, which is what FHA was designed for, is to kind of create
Right.
a level
That's true.
playing field for
That's
everybody.
true. It's level playing field. That's an excellent question, Jack. Hello, Jack.
I'm right here. Thank you. Thank
Okay.
you. Appreciate that.
Thank you.
All right, Jack. You have a good rest of your evening.
Likewise, and if I have a client, I will definitely send one your way that wants to do conventional, if that's the case. I appreciate you, gentlemen.
All right.
Okay,
Thank you, Jack.
Thank you, Jack.
That was a good question, Cortez. So, and again we had touched on that previously, but so back to the differences between going to a broker such as yourself as
Okay.
opposed to going to a bank.
Right. So all these banks, credit unions, mid-sized direct lenders,
Right.
correspondent lenders, brokers, everybody has the same basic rules, but the pricing is different.
Okay.
So what I always tell people, hey, I can do what that lender can do, but let's see who has the best pricing.
Right.
And I think it comes down to the pricing and who does that customer trust
Well, the level of service.
and the level of service.
Right.
Right.
So I know one thing that's happening in the market is that, again, they're kind of leveling the playing field for borrowers and protecting them in the form that, I don't recall what the time span is, but when you apply for a loan, when a borrower applies for a loan, they get a GFE, a good faith
Right.
estimate, which shows them the down payment, estimate of their down payment and closing costs and things of that nature. They're encouraged now to shop that
Oh, yes.
to other lenders to ensure they're getting the best rate
Yes.
or the best type of loan.
Yes. People should shop. I tell every client, please compare my loan to another lender. And if I can't beat that other lender, please fire me.
Right.
Please
Fire you on the spot.
Please fire me. Send me my letter. You're fired.
Right. And you know, and that's fair. And I'm glad that they did that in this market, because previously most borrowers felt like they were pressured once they obtained the loan. They were
Right.
pressured to go with that loan, and then come to find out they could have gotten something else better.
Right. There's this new thing coming out. I know you heard about it.
Right.
In October, CFPB or
Oh, it's so many acronyms and stuff
Yeah.
coming out now. I can't keep up.
Now, I don't know what that stands for, but that's what it's all about.
Right.
It's all about, okay, new home buyer, you have your loan with Cortez, but you have 4 days to see if somebody else has anything better. So this is coming up in October.
Right.
And this is going to eliminate 30-day escrows.
Right. I mean,
Yeah.
they'll be 45 and
It's gonna
60
be,
day
it's gonna be
escrows now.
45 because now there's all these time periods and time frames, and the lender has to do that. The seller agent has to do this. I don't even know what it is, but I just know it's going to take longer. But the consumer will have the chance to shop and get the best deal possible.
Got it. Which is always a good thing.
Yes,
So
I love this. I love it.
and it is. I mean, I encourage people
Right.
not only ask your lender questions, but ask your realtor questions.
Right.
I see so many times that people feel obligated to go with their friend,
Right.
who's a realtor or who is a lender, because it is their friend. But that friend, at the end of it's business.
Right.
You need to do what's best for you.
Right.
If your friend can provide you the best experience as a realtor or provide you the best loan, then go with that person. But if not, you need to
Exactly.
find someone who can get you what you want at the end of the day.
Right. See see, this is the thing. With the owner of La Paz Mortgage, we think alike. We want to beat everybody if possible. Can we now, are we 100% can beat somebody 100%? No.
Right.
But we have 20 lenders, and we know we have a thing called Loan Sifter, and all of our lenders are in Loan Sifter, and we can put in a scenario, this person's scenario into Loan Sifter, press go, who has the best pricing, right? So if I know I'm going up against the big bank or some correspondent lender or some mortgage banker, I'm going to go to Loan Sifter, especially if it's conventional. I go to Loan Sifter and see which one of my banks has the best pricing so we can beat the competition.
Got it.
With that conventional loan.
Got it.
And well, now I won't tell our secret.
No, don't spill the secret.
Now I won't tell our secret
let them call you first.
Because the secret is very simple, and I'll just keep it to myself.
Got it. So if people want to find out that secret, how can they reach you?
Oh, they can call me direct, 310-743-2877, or email me. It'll go straight to my phone or my computer. Cortez, Cortez at loansbycortez.com.
Got it.
And so what I do, somebody can call me, give me their scenario, and I can log in and boom, give them pricing, give them a quote.
Right.
Okay, I'll call it a quote. Give them a quote.
Right on the spot.
Right on the spot.
And that's assuming, and now you haven't even looked at their information at that point, but this is just assuming from what they tell you.
Oh yeah, I'm so confident. If they know what their credit score is, then that's really the only determining thing
Right.
that can change.
And this is only for conventional.
Oh, for FHA or VA.
Oh, okay.
Or jumbo.
Oh, really?
Right.
Okay. So that's good stuff.
Oh, thank you.
Yeah, it is. So, we talked about a lot of good stuff. Again, just to kind of recap on it, we covered conventional loans, Fannie Mae, Freddie Mac, conforming, non-conforming loans, high balances, jumbo loans. Again, if you have any questions about any of these types of products, or you want to reach out to one of us again, you can reach me at ejhawkinsre@gmail.com. My name is real easy to spell, just letter E and letter J. I made it simple that way, right? So, again, feel free to reach out to us if you have any questions about any of the information that we covered. But something else before we move on, and you may have or may have not touched on this, but with a conventional loan, is there MIP?
No. So that's why I call it a clean loan. There's no extra money added to your loan amount.
Right, and MIP, everyone, is mortgage insurance premium.
Yeah.
Which does not benefit you, it benefits the lender.
Right. That's only on FHA loans.
Got it.
But I want to add one last thing.
Go ahead.
People always ask, can I buy a house with my corporation, LLC?
Oh,
and,
yes.
my trust, and no.
No.
not with these type of. Now there's this is for another show.
Right.
But with hard money or private money, you possibly can.
And that we will cover on another show.
Yes.
I can't wait to talk about that because I do get a lot of questions on that as well.
Right.
I started a nonprofit or a corporation. I want to buy a property for $1, I heard. Really?
Oh, right.
Yeah. So,
Right.
which is very rare.
Right.
It has happened.
Right.
I've actually had it happen before, but the reality is it doesn't happen that often. But that was today's show. I'm glad we were able to cover a lot of stuff, but we'll go ahead and wrap it up. Thank you for the people who called in. Thank you for everyone who's tuned in to this real estate reality show. Again, I'm your host, EJ. My name is Cortez. EJ Hawkins, and my co-host, Cortez Johnson. Thank you very much.
Thank you.
All right.
You're listening to the Real Estate Reality Show with EJ Hawkins and Cortez M. Johnson. Only on LA Talk Radio.